Wednesday, May 13th, 2020, maneco 64, home of alternative economics and contrarian views. The title of the video today is Look Out Below, as stocks could catch up on the downside with bond yields. I'm going to talk about the technical picture for the stock market. I'm going to reference a story from February by Zero Hedge. Even though they wrote one recently, which I couldn't find, but the one from February will do. Before I go into that, though, I'd like to mention a few things. First, about Billy. It looks like he has a fan, maybe or maybe not, in the United States Senate. I saw that Senator Lamar Alexander of Tennessee, in the hearing yesterday, he was at home and he had his dog Rufus behind him, as you can see here. A cute little dog. Does Senator Alexander watch maneco 64? Did he get the idea from maneco 64? I doubt it. It looks like he made quite an impact, this little dog. So yeah, dogs are nice. And the other thing I'd like to say is that today we're playing golf again for the first time in over 50 days. They've got all these rules now here. I don't know how long it's going to stay on for, but usually we just go to the club and join up with friends and play. It's not a big club. You don't have to book tee off times, but now you do. And you can't go into the clubhouse. You can't go into anywhere. You can just play and then leave. But it's better than nothing. So I'm playing this afternoon. So the clubs are going to get out of hibernation, the golf clubs. The other thing I wanted to talk about before I go into the stock market and the technicals is the news about the economy, the news about this crisis, about the lockdown, the feeling I'm getting from listening and reading many articles, and I even listened to the press conference by Governor Cuomo of New York yesterday. One of the guys I chat to on Twitter said, you must be really bored to watch that. But I said, well, I think it's important to watch what these people are thinking. So what I got from Governor Cuomo, I've also heard in the UK, the Chancellor is extended the furlough scheme until October. And it's going to cost a lot of money. We're going to have to pay for it. And apparently from August 1st, the employers are going to have to share half the cost, I think, of the furlough scheme. I think they pay 80% of people's salary, up to £2,500. So the FT is saying as well, a leaked Treasury document suggests ministers could sharply raise taxes, facing an estimated 337 billion deficit. So things are not going to get better. Governor Cuomo seems to be following Dr. Fauci to the letter. I think the mainstream media has done a great job of making even the public want the lockdown. I think even if we were told that we could all do everything we did before the lockdown and forget about everything, people wouldn't do it anymore. So I think very few people are kind of awake to what's really going on, and I'm not going to go further into this. So what I'm trying to say is that it doesn't look like things are going to get that much better economically. And I've listened to people say that if they could keep the lockdown going for another month, and this was about a couple weeks ago, that they would be able to break the supply chain and the economies would get even worse. With the furlough scheme in the UK, do you think companies are really going to pay the cost or share the cost with the government? No, they're just going to sack the employees. They're not going to have any jobs. I listened to UK column news the other day. It's about the UK, but I think it applies to every country in the world because this is a globalist agenda. UK is a big part of that agenda. I think the establishment. I'll put it up in the cards. Listen to it. The UK government, UK column news had documents from the UK government from March 22nd. And it shows you their plan. They want to basically transform the economy, and they can't wait for some reason. So they want to use this crisis as an excuse. So things are going to get worse. We're going to get a lot of debt, deficits, taxation, inflation, because taxation on its own to pay for these programs and to pay for all the deficits is too much. People have a low tolerance to high taxes, so they'll do it through the inflationary tax, which is hidden from most people. Most people don't understand inflation. That's why I try to explain it here in the channel. So that's why I see out there nothing, unfortunately, getting better. And for those of you who watch my videos sometimes and say that it's fear porn, that I've been saying this for years, well, I've been proven right. We've got like the worst economic collapse since the Great Depression. We've got all the fiat currencies collapsing versus gold. So I don't know what you're talking about. Anyway, let's go look at the stock market and bond yields. So there's a story here from February 6th this year, and it says stock and bond investors are looking at identical virus headlines and both concluding great reason to buy. What does it mean, both concluding great reason to buy? Well, because at the time, as you can see here, bond yields are very low. And the way that bond yields drop is that investors buy the bonds. There's an inverse relationship between bond prices and bond yields. So at the time, bond prices were quite high. The yields had dropped quite a bit. But the NASDAQ, as you can see here, also had gone up. Because when bond yields drop like this, it means that investors are not too confident about the economy. They think there's going to be very little growth, so bond yields drop. But at the same time, the NASDAQ was going up. So this was beginning of February. So if we go to the NASDAQ chart, this is not the composite. It is the 100 future, but it's very similar. So let's go here to beginning of February. Yeah, the market was still going up, making all-time highs. It went up for another couple of weeks, but look what happened afterwards. We had that massive and very fast crash that began at the end of February and bottomed on the 23rd of March. So right now, as you can see, we've rallied in the NASDAQ. We're almost back up to the high from February, the all-time high. So as you can see here by this 10-year yield chart, this is going to the beginning of February. You can see that it dropped there, and now we're almost at the same levels that we were prior to that crash. So that's what we're talking about right now. We've got the same kind of divergence as we had back in the beginning of February. Yeah, markets are not perfect mechanisms, but I think you need to be aware that we could see the stock market correct or crash even more. I mean, yesterday, of course, was not a great day. The Dow was down almost 500 points, or just under 2%. S&P was down 2%, and the NASDAQ composite was down 2% as well. Let's have a look at a chart of the Dow and the S&P. Let's start with the Dow. I've looked at this chart before, the retracement from the all-time high to the bottom in March. And I've said before that the 24,000 level would be a key level. And as you can see, it's the 50% retracement. And it's been a very important level as it trades above and below there. So right now it's holding on around that level. Yesterday, of course, we closed below that. The S&P, that has done better. It's holding above the 50%, but what it's doing is it's trading between the 50% and the 61.8% retracement, which is the golden mean, and that's quite usual in markets. So I would say that the key level to watch here below is 27.90. That's the 50% retracement. So I think just like in February, a lot of investors, especially the bullish investors, they are downplaying the consequences of this lockdown to the economy and to the markets, just like they were downplaying in February the potential for what we got after that, because of they weren't seeing the virus as a problem in the US. It was just a Chinese thing. And I think they're making the same mistake now about the lockdown. Let's quickly look at the chart of gold, because gold is starting to look quite interesting. Yes, it's been frustrating, but if you look at the daily chart, it's doing a perfect consolidation. Consolidation patterns are patterns that result 75% of the time result in the move towards the previous trend. So the previous trend, as you can see here, from the bottom in March has been the market going up. So we're forming a pennant, like a triangle or pennant, and it's doing it perfectly because the range is getting smaller and smaller. The volatility has declined a bit in the gold market, and it's quieter. But we're getting to near the apex of that pennant or triangle. And normally it results itself, as I said, 3 out of 4 times to the upside. So right now the resistance is around 1720, maybe a little lower. So if we can break through there, that's very positive. And on the other side, we've got the stock market trying to hold on to that 50% and 61.8. I think it's going to result on the downside, and I think gold and silver are going to result on the upside. That's my speculation based on the technicals and the fundamentals. And I'm not claiming that I'm going to be right, but the probability looks pretty good in my opinion. Let's just quickly look where we are this morning. So gold and silver are basically unchanged. Gold is just above 1700. Silver is around 1540. The Dow future right now is down 120 or 0.5%. S&P is down 15, also 0.5%. NASDAQ 100 future is down 0.25%. The currencies are fairly quiet, so I won't go over the currencies. So my conclusion is that the stock market looks precarious. Bond yields are pointing to another big move down in stock market, and the fundamentals are starting to look worse and worse for the economy. The crisis, I think, is gonna drag on, and even if the economy gets more closely back to normal, if businesses reopen. I saw a comment from Zell. I think he's one of the big investors. Sam Zell, I think. He said, yeah, you could open malls, you could open restaurants, you could open airports, you could open hotels, but will people be comfortable to go to these places again? Especially considering that the mainstream media and government have done a great job of making people really scared about this health crisis. So those are my thoughts for the day. If you enjoyed the video, please hit the like button. Make sure you share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.